Today, we're going to be covering property tax prorations. And this isn't just something that you want to know for your Florida real estate exam. Understanding this math is essential to understanding how closing date will ultimately impact closing expenses. Now, ultimately, in the real world, you've got title companies who are doing these actual calculations, but today we're going to break down and simplify these calculations so much that even if you're not doing them, you're going to understand how they work. And more importantly, for your real estate exam, you're going to have simple, easy to follow steps to get the right answers every single time. So let's head over to the board and get right into it. Let's go right into solving a property tax proration question. So on your exam, you'd be given information such as the annual property taxes. And in this case, let's say $5,453. Just a number I made up off the top of my head. In the real world, we'd look at the actual tax assessor's records to see what the actual tax bill is. And on your exam, that information would be given to you in a question such as this. Now, we also need to know a closing date. So what better day than the present? We've got today, let's just double check this, August 13th. Now, in general, the day of closing belongs to or is charged to the buyer. However, what is agreed to can ultimately differ. But on your exam, it should always specify, and if it doesn't, the general assumption is the day of closing is charged to or belongs to the buyer. And we're going to make more sense of exactly that in just a minute. So closing to buyer, and that means closing day. And how we're going to simplify this down is visually. So we've got this key information that we would pull out of the word question in the exam, or again, we would search in the public records to figure out this. We'd estimate a closing date here, and then typically, this is going to be always the case, day of closing, charged to the buyer. And so what that means, let's actually give us some more room here. Make that a little bit smaller. So taxes are levied on a calendar year basis, which means from January 1st to December 31st. Now, in the real world, if you pay your property taxes as part of your mortgage payment, that's ultimately going to confuse this much more than you would on the exam. Because technically, you're not actually paying monthly to the property taxes. You're paying into an escrow account, a trust account, money that's set aside. So later when the taxes are due, that's when the money gets liquidated from that account and paid the taxes. So the actual taxing authority, they actually don't even become payable until November 1st. So that's going to be standard. Any property taxes in Florida, January 1st to December 31st, again, based on a calendar year. This is where they become payable. And that's going to be important for helping us understand the why behind this proration here. So hang on. But ultimately, that's not going to be something we need to actually solve this. But it will help us right now if you're just figuring out and learning about prorations, or you've always been involved with them because maybe you're in real estate. I'm not going to tell anyone you've been doing real estate for 10 years and you're still not exactly sure how prorations work. Just stick around, watch to the end of the video here. So we've got our day of closing here, August 13th. And this is all just a rough estimation, so I'm going to put it right there. Let me know in the comments if you would line it up differently on the number line. And because day of closing belongs to the buyer, I'm going to draw this big, thick line here. And I'm going to switch to red right now to emphasize this here, is that this is where the seller owns the property. All goes according to plan with the closing. This is where the buyer will own the property, including when the taxes become payable. So in November 1st, when the taxes become payable, the buyer is ultimately responsible, or really whoever owns the property when the taxes become payable. That's ultimately who has to pay the taxes, because taxes, property taxes specifically, they're a specific lien. They attach specifically to the property. Every year they're reassessed on January 1st. They're payable on November 1st, and it doesn't matter how many times the property gets transferred over the year, those property taxes are not going to change. Now, what's really important that you remember is that we're always dealing with an entire year, just a regular calendar year here. And again, our day of closing, as it says in the question, charged to the buyer, that's why we put this here. And all we're trying to calculate is just what is the, we'll put this in green, what is the seller's fair share of the property taxes. Let's maybe try blue. I don't know if you guys can see the green as well. Let me know in the comments, because even if you're watching the replay on this, we do read the comments. If you say no, you got to use a thicker green, or you know, let's beef this one up a little bit. There we go. Perfect. So our proration is going to occur on the day of closing. And the proration is going to be the dollar amount. And these are the magic words for your exam questions. If you could just remember this, you could probably eliminate half the answer choices. You might even be able to get directly to the answer just by knowing debit to the seller. We'll put it up here. And credit to the buyer. Debit to the seller, credit to the buyer. And why that is, and why this is so important, is because on the day of closing, there's going to be a debit, a payment from the seller based on the seller's days that they own the property for the seller's fair share of the annual property tax bill. If you remember up here, our total bill for the entire year is $5,453. And so that's what's ultimately going to be due here, $5,453 in November. That's going to be payable. Now, again, we're going to forget about the whole mortgage thing as if the money is going into this magic escrow account, which is what happens when you pay it as part of your mortgage payment. It goes into an escrow account, and then it sits there until November 1st. So your exam's going to be a lot simpler than that. We'll talk about this at the end of the video of how this would factor in, because it kind of reverses the prorations. But if you're just here to study for your exam and really just understand the basics of this, what we're going to assume that we're paying cash in November for our property taxes, or wire transfer check, whatever it is that you're paying for, but you're not paying it into your mortgage. So you're not paying this monthly, just to keep this super simple. A lot of times, though, that is a condition of your mortgage in the real world, is that there is an account set up where this money is collected monthly, so that way you're not having to pay a $5,500 bill or whatever the amount of the property taxes are come November. And the idea here is, again, the seller's days. So this time frame here that the seller owned the property up until, but not including, August 13th, that represents our seller days, how many days the seller owned the property, and that's what we're trying to find out, because we're going to debit from the seller and credit to the buyer. Debit seller, credit buyer. That's almost always the case for exam prorations, as well as a lot of times in the real world as well. Most of the time it is a debit for the seller, where the seller's paying this and the buyer's receiving this. Now, we don't care about this time frame. That's where a lot of people get confused with these questions here, is they start thinking about both sides. But the question really just is, how much does the seller have to pay at closing as their fair share of the property taxes? Because ultimately, the entire burden of those property taxes for the entire year here is going to be whoever owns it in that payable window there of November 1st. And so we want to make sure we get the appropriate amount of money transferred over. And so going back to the whole mortgage payment thing, let's say the seller has been paying their property taxes as part of the mortgage payment. So there's essentially an extra step where that money goes from the loan company, where it's held in escrow, to the title company, and then from the title company, that's where they credit this on the actual closing disclosure. So it's some extra debits and credits essentially that appear on the closing disclosure to be able to get this money the seller has already theoretically set aside with their mortgage payments. So let's calculate the days here. Now, essential at this point that you get this step correct, because if there's any point in all of this here where people are most likely to go wrong, it's coming up with this number right here. Personally, I've came up with it wrong plenty of times, and teaching this to thousands of people over the years, this is the number one point, and it's the easiest part to mess up because it's simply just adding together the days of the month. So we have January, February, March, April, May, June, July, and we've got August. Now, let's start with August here because we already know what we're dealing with in August because we're only counting up until the day of closing because according to the question, the closing belongs to the buyer. So the buyer's responsible for the taxes for that day of August 13th, meaning we're only going to count 12 days in August. Now, the other part of this here is knowing how many days are in every month. You could have a couple different things to remember. You could have a rhyme of 30 days, have September, April, June, November. And then essentially all your other months are going to be 31 days, with the exception of February, which is 28 days, unless it's a leap year, which is 29. But on your exam, you don't have to worry about leap years. So now, if you don't like the rhyme of 30 days, have September, April, June, November, I never really could remember it at first, but I've said it so many times I can't forget it. The way I like is a little bit more tactile, where you just work your way across your knuckles. And you go from knuckle to in between a knuckle, knuckle, in between a knuckle, knuckle, in between a knuckle, knuckle, knuckle. And so what's happening is you're doing January, February, March, April, May, June, July. And whenever you're on a knuckle, it's 31 days. Whenever you're between a knuckle, it's 30 days, or February's case, 28. And then July and August are actually back-to-back 31 days. Now, we didn't need to know that for August because we only are counting 12 days in August here. Now, this is not where people mess up. Most people have some sort of trick, whether it's the knuckles, the number of days, whatever it is that they're doing. Where they mess up is putting it in their calculator. Now, on your exam, you do get to use a calculator, just like the one you're seeing me use here. Although, you got to turn off the beep. If you're taking the exam with this, just press the little music note on your Tampa School Real Estate Calculator to disable the beep, so that way it is exam compliant. But we're going to leave the beep on here because I like the beep because that's how you know you got one of these numbers here. But on the exam, you can't use that beep, so that might be why you'd want to turn this off and practice this. But just be careful because you are very likely to either drop one of these digits or maybe just skip one of these months. So as you do this on your scratch paper, what I recommend, because you don't have a history on most of the calculators, pretty much any calculator that's allowed for the exam, it's just gonna be like this, where it's just a basic 4-function calculator. So this is where you just got to double check here. And I know this is really simple. Let me know in the comments. You're like, of course, I'm not going to make this silly mistake, but you'd be surprised. So 31 plus 28 plus 31 plus 30 plus 31 plus 30 plus 31 plus 12. And so we come up with 224. And when I say double check yourself, here's what I mean. 31 plus 28 plus 31 plus 30 plus 31 plus 30 plus 31 plus 12 is 224. Double check. Literally doing the math twice. If you're this thorough as I just was, look, I was worried about making a mistake right here live on the air, and you could witness it as it happened. That's how likely it is. I've done it so many times myself and seen plenty of students do it just because it's so monotonous, and it's just one thing after another, especially when you're in a high intensity environment like the exam. So that being said, in the real world, if you're just doing this to try to figure stuff out, we've got great tools like ChatGPT and Google Gemini and all these calculators and things like that. Your title company provides probably even a net sheet calculator, which is a phenomenal tool that will do all these calculations for you automatically. And ultimately, what you want to understand is that this is out of the total days in a year. So we've got 365 days on this number line here. 366 if we're a leap year, but we're not worried about that right now. So 365 days here. And the seller owned this property out of this entire 365 days for 224. And look, here's the thing we could do on our calculator here. 224 divided by 365. And so roughly about 61% of the time. That's about what this is. Now, this is not a step at all in terms of you solving this, but as we explain this and go through this together here, I just want you to take note of that, because that helps you gauge, and I'd say I do a pretty good job of doing about a 60-40 split with this number line right here, but about 60% of the money, 61%, is going to be what that is right here. And then the buyer's share is the 40%, but we don't care about the buyer's share. We're just trying to find the seller's share. And after I've explained this all, we're going to go through this exact same problem here one more time, but without all the extra explanation. So if you're studying for your exam, you'll be able to just zero in on what's important to know for solving this here instead of all this extra explanation here that I've been providing. It's hopefully going to help you better understand this, but if this is the first time you're going through it, it might still seem a little confusing. And my number one tip for you with any of the math for this exam, because it's the most predictable questions on your entire exam, are the math questions. I could almost guarantee, maybe not this proration, it could be a rental proration, it could even be an assumed interest proration, but I could pretty much guarantee you're going to have a proration question on not just your real estate exam to get your real estate license, but if you're getting a broker license as well, this is a very popular question that will be on either of those exams. Now it comes to actually solving this here. We're going to go back to our question that told us it had $5,453 for the annual property tax bill. $5,453. Let me make sure I got that right. Yep, $5,453. And we're going to divide that by the 365 days. So $5,453 divided by 365. Now, when you do this in your calculator here, 5453 divided by 365, you're going to notice, let me zoom in on that right there. Look at all those extra decimals. Do not round at this point. This is another, I don't want to call it mistake, but if you want to get exactly the right answer on the exam, I would consider it a mistake. Because when you don't get exactly the right answer, when you're off by a few dollars and none of the answers line up, that's not very confidence boosting. So if you want to make sure you get exactly the right answer, you want to leave that in your calculator and just hit times that number of days, which in this case was 224. So times 224 is going to give us $3,346, and it's actually going to be about 50 cents we round. 34.46.50. And again, that's going to be a debit to the seller and a credit to the buyer. And that $3,346.50, again, it's going to be exactly the 61 point whatever those decimals were percent of that $5,453 for the entire year. Now, the repetition is key. Any of these math questions are the most predictable on the exam, so the more times you practice, even if you're doing this exact same question. So if you really want to solve this here, put this on repeat. Listen to this as many times over and over and solve this. Even if it's this exact same question that you're doing here, yes, you'll remember the numbers, but also more importantly, you're going to remember the steps to come up with that. So we're going to do exactly that. We're going to solve this exact same problem again, but I'm going to omit all the extra explanation I provided that first time around and just focus on what are the calculations that you need to solve this and be able to answer this on your exam. So that way you can remove all this extra information, simplify down. Just like this clip is going to be just like the recordings that we have in our exam cram videos that are available at passfirsttry.com. You can get that monthly, or you could purchase a whole 12-month subscription to that in advance. But that has all of the math questions that are most likely to be on your exam in short, easy-to-follow videos with minimal extra explanation. Your pre-licensing course will have a lot more of the explanation if that is what you're looking for. But when it comes to studying for the exam, less is more. Those exam cram videos, they come with a workbook. This is the workbook. This is the textbook the FREC requires. It's about 20%. And so that simplification really is the key to making this manageable enough to remember it, to be able to study for your exam. So without further ado, let's do the simplest version possible of calculation. And I'm still going to put the diagram and layout just like we did before, but all the explanation, we're going to be very much just like an exam question here. And in that exam question, it's going to tell us that our annual taxes, annual property taxes, pick the exact same number, $5,453 a year. And our closing date of August 13th. And day of closing to buyer. That is the key details you would extract from the question. Number 1, the taxes due. Number 2, the closing date. And number 3, day of closing to the buyer. Now, solving these, I always do this exact same way. Even if I were to have to solve one of these today, whether that's for an exam or otherwise, and I couldn't use a computer to just Google it, this is how you would do it. You lay out your year. You put your closing date. This is where the seller owns the property. This is where the buyer owns the property. Here's our day of closing. It counts as a day towards the buyer. Remember, we don't care about the buyer. We just care about how much is going to be debited from the seller that's going to be credited to the buyer on the day of closing. So that day of closing is where this transfer occurs. And that's based on the seller days. Now, just like we solved before, we've got January, February, March, April, May, June, July, and August. We're only counting 12 days in August because we're not including the day of closing because day of closing belongs to the buyer. So only 12 days in August, 31 days in January, 28 days in February, 31 days in March, 30 days in April, 31 days in May, 30 days in June, 31 in July. And again, double check this math here to make sure you get exactly this, because it's very likely that you could easily drop one of these decimals when you're doing the calculation in your calculator. So just check and double check that number there, because if you're likely to make a mistake, it's probably that. And once you find out those 224 days, we can now move to the final step of taking those taxes here of $5,453, dividing that by 365 days in a year, because this is an annual number, the $5,453. So we break that into 365 to our daily rate, 5,453, divided by 365. And again, do not round. Save your rounding until the very end. So you're just going to leave that in your calculator. That's why we already found out that this is 224. So we could simply do times, that long number times 224. And that will give us $3,346.50. Because now at the end, we can round. Because you can see how that came out there with 0.4986. But if you were to round on the daily rate, when you multiply that 224 times, that half a penny adds up 224 times, because half a penny 224 times is what, like 130, 125, 112 pennies? Yeah, 112 pennies. You don't have to be great at math. That's why you get to use the calculator on the exam here. But point being, it makes a difference if you round before the end. So the general rule of thumb on the exam is save your rounding into the end. And you can see, we'll have to check the time after the fact here, looking at this recording of exactly how long it took to get us from start to finish here. But you can see this is not long to complete this calculation. This is a pretty straightforward calculation. There is a good deal of steps in these questions here, but any of the math questions that have lengthier steps, such as this one, they're much less likely to have distractor or deceptive information in the question. They absolutely still could, so watch out for that. We've got a lot of great tips in the Secrets of the Exam course, and that's all part of the Pass First Try Exam Prep bundle. So if you're looking for more math review, if you're looking for being able to drill the key points, instead of 60 hours, we have an audio review that takes the key points from each of these units and boils it down to just 5 hours. And that allows you to have repetition. That's the best thing you can do for the non-math questions. And with the math questions, our exam cram videos have every one of these important questions for the exam, all the math and videos solving it exactly like we did there, but it's much more like this version that we just went through here, with less of the explanation, because the explanation can be great at first if you're just learning this, if you're trying to understand this fully. That's more what this pre-licensing course is about, is understanding more of those extraneous details that FREC wants us to teach. But when it comes to passing your exam, that's where, again, this workbook and all the Pass First Try exam prep tools are going to be the most extremely beneficial when it comes to studying for your exam, because it really helps you zero in on what you need to know and just what you need to know. So from a legal perspective, this is probably not your best reference tool, but from a perspective of passing your exam, this really is the best tool that has been trusted by over 10,000 students to pass their Florida real estate exam. So absolutely, I would recommend that all of the exam prep tools are in that passfirsttry.com if you want more details on that. Or if you do have any questions about this math or passing your exam, or even just starting a real estate career, or maybe getting your broker license, give us a call at this number. It's 813-333-2676, 24/7. Call us, text us, any way it is that we can help you out here at the Tampa School of Real Estate. .us. Plug that right in. You can find us right online and browse all of our courses. We've got lots of great videos like this, lots of articles, lots of information to help you advance your real estate career, or even just learn more about it if you're very early on. So any questions we can help you with, reach out to our advisors 24/7. Call us 813-333-2676. That's about all the time that we've got for today. So thank you all for tuning in, and join us this Friday for State of Real Estate. The most powerful tool to study for your real estate exam is the Question Simulator from Tampa School of Real Estate. We've used our years of experience in preparing students for the Florida real estate exam to bring you the most powerful exam study tool available. In the Question Simulator, you'll be able to go directly to a particular unit so you can focus on the sections where you need the most practice. We have also included the percentages of each unit so you know which units are the most important for your real estate exam. Every question will immediately give you detailed feedback, which is almost always more important than the question or the answer themselves. After completing all the questions in a particular unit, you can go through question by question and review any that you've gotten wrong. You could also print out a report at the end of each quiz. The Question Simulator from Tampa School of Real Estate is 100% mobile compatible, so you can practice with test questions anywhere you have your phone with you. Enroll now at questionsimulator.com and get ready to pass your exam. Are you studying for your Florida real estate exam? If you are, you need to check out our Pass First Try strategy. You're going to love this. It's 4 steps that we break down the process to study for your Florida real estate exam. So you're set up to pass your Florida real estate exam, because that's what you're studying for, right? To pass your exam. It's 4 steps. Number 1, you learn the information. You've got to learn this to be able to
pass the exam, but it doesn't stop at learning. Step 2, you've got to reinforce the basic, simple, key concepts. As you learn this information, keep reviewing the simple things. You don't need to know everything, but you got to review these basic key concepts. Step 3, you've got to test your knowledge. The exam's going to test your knowledge, so if you don't test your knowledge in advance, you won't find out if you know what you think you know until you take the exam. And then step 4 is be confident and prepared, because even if you know this material, you need to be confident that you know the material. Check out the full strategy at passfirsttry.com. That's passfirsttry.com.
Real estate is something that you're interested in pursuing. If you're interested in advancing your career, maybe you had your license before and it didn't quite work out. You didn't have the right guidance, you didn't have the right situation, you weren't at the right firm for you. It's okay to start over. It's okay to start again. Even if you've lost your real estate license and you maybe see the interest rates dropping and the real estate market picking up again, that you're interested in reactivating your real estate license. But the main thing is, again, finding out about these opportunities. So dress to impress. Come to the career fair ready to impress these recruiters at these firms, even if you are brand new. You know, this event is a very safe space. I don't even like using words like that, but it really is, because if you're new and you don't really know about real estate, this is the perfect place to come to ask those questions, because this is a room you could put yourself in with people that are going to be far beyond the experience that you have in real estate, even if you are just getting started. The more hands you shake, the more money you make. Get your eyes opened to the opportunities that are out there.